All right, everybody. I'm going to continue to stress what I keep saying. I have no idea what the stock market wants to do here. I've been telling you that ever since Wednesday, it has not been good. Today, we've suffered another distribution day on the NASDAQ. On the New York Stock Exchange, we suffered a huge distribution day. Terrible open for the NYSE, but the S&P 500 almost giving back all of its gains from the day before. The Russell 2000 still holding up relatively well, so that makes it kind of confusing here because while it is ugly on the extremely short term, it's not ugly overall. Intermediate or long term, we're still in an uptrend. And while the market looks rough here and the biotechs look terrible with breakdowns everywhere, I mean, this is just like one stock and then PPHM. There's like what another one looks like, and there's Celgene. That's what another one looks like. BIIB, reversing that game. CBMG, and of course CRMD, the opposite. Ha ha ha. How much are we missing out on there? 210% gain now? Yep, 207% gain miss. But the bottom line is biotech looks ugly, and that's why we're going to start our hedging process. BIS is a new long, 2.5% of account portfolio. It has successfully proven to me that the path of least resistance is now higher. The first cut loss you can put at 33.25, and then the final one 32.65. It should hold these levels here. Biotech should break down right here. If they don't, then you know it probably means biotechs have another run. But while I have that hedge in BIS, what was very surprising is that I technically have 4 new long positions, 3 in high quality names, 1 in a higher quality speculative name. So we'll just keep it to you guys watching the video, which I realize isn't many of you, which is very upsetting. I do so much work and I do such hard quality work, and it just seems like nobody gives a shit. So if you're watching the video, thank you. You're obviously learning a lot. These videos, I should make these public then for people to watch. But anyway, KE is one of the new long positions. It was the first one to show up. It's in my CanSlim scan, producing another pocket pivot point buy signal. This has been part of the Shadow Stocks portfolio, I guess, since it's spun off from K-Bulb or wherever the hell they spun off from. I can't remember. But it's a pocket pivot point signal confirmed in my price volume BOP surge scan. A little bit risky because it's up 4% in one day. You can use the open of today as one cut loss level, and the low of day has to absolutely be the final cut loss level if you go long this position, which is what I will be doing. And longs are still working because we saw what Trex did today, up 4%. RCKY had a bit rough moment, but it's holding up. And our speculative stock DGLY, it's a volatile one. So, you know, while it was down 4% today overall, you know, it's only 1% of account capital, lower volume, pullback, higher BOP. So far is looking good. Low a day of the signal date, 1240 is the final cut loss level. But overall, as you can see, the recent longs yesterday held up well despite today's sell-off, so it's no surprise then. Besides KE, we got a few more. OGS also producing a pocket pivot point signal off the 50-day moving average. I at first did not think it had enough volume in it to qualify my price volume BOP scan to confirm a long signal in the CanSlim scan, but it did. It showed up in that scan, and since it did, that confirms the CanSlim scan and in this neutral condition that we are under. So OGS is a new long signal. Once again, the low of day should be your final sell stop level. However, if you do use this low of 41.55, you're not going to lose much anyway. So what you could do is you could do half here and then a half below that low, and that would not be that risky for a 2.5% position. And then the big one, stock we were just recently long and got shaken out of, CMPR. CMPR was extremely disappointing. We got shaken out of our long position. It has now reheld the 50-day moving average, and the hardest trade to make is normally the best one. It's a pretty hard trade for me to make considering we were just long it and I just got shaken out, and basically it's now higher than where I got shaken out at. But it's another pocket pivot point signal. Sadly, volume is below average, but overall this is a very bullish stock chart. It is also part of the main perfect speculator scan. I don't know how many stocks qualify for it currently, but I know it's not many. 63. So it's one of 63 stocks in that scan. CMPR. So it's definitely a long position. This is a 5% long position, and our risk on this one, 50-day moving average. This thing closes below the 50-day moving average. We are out. My sell stop intraday, though, 82.28. I'm not letting this thing go below that low a day. If it does, I'm out, and if it whipsaws me, god damn it, there's nothing I can do. And that then leaves us with the last long position. By the way, CMPR, if I didn't say it, 5%, is FCB. Very high quality stock. It's in my Cancelim scan. It was also in my IPO scan. It's also in my BOP for 20 days scan and in my Max Green BOP for 5 days scan. So that's really good. However, the base still, compared to how far away it is from the 50-day moving average, is a little short. Would love for the base to be longer. Would have also liked today to have been a pocket pivot point signal. However, the last pocket pivot time I waited for pocket pivot point signal, wasn't happy with how long the base was. We missed out on a 207% gain in a month and a half CRMD. So we won't do it here. I know it won't move like it, but you know what? It's a very nice chart. If we're wrong, we don't risk much at all. We don't even, I mean, even if you use the low of day here on this date, you're still only risking about 3%. So FCB, that's going to be a 1% position. OGS 2.5, KE 2.5, BIS 2.5, and CMPR 5%. All of them have very clear-cut lines in the sand. The low a day, if they all rip through the low a day, cost us a little bit, but not that much.